Hello everybody, today we are going to discuss another topic in Forex basics. So let's get started what topic we have today. Okay, today we are going to talk about trading in currency pairs. This is the very basic, this is where the whole Forex market stands. What currency pairs are there in the Forex market that we can trade on? So let's get started. So what is currency pairs? So we know that everything is traded in pairs. Like in ancient times, there was this barter system that we would exchange one quantity of some commodity or goods, and then we would get in return some other quantity. So this was the barter system in olden times. So we exchange one thing with another. So for traders in forex trading, it is the simultaneous buying of one currency and selling the other currency, because it's all based on currencies. And currencies are traded through a forex broker or CFD provider and are traded in pairs. And currencies are quoted in relation to another country. For example, we have Euro USD pair and GBP and JPY pair. And each currency pair is constantly in a tug of war with each currency on its own side of the rope. So like it's a tug of war, and each currency is pulling the strength of the currency to its own side. And an exchange rate is the relative price of two currencies from two different countries, okay? And then exchange rates fluctuate based on which currency is stronger at the moment. And major currency pairs always include the US dollars, as US dollar is the strongest currency for many decades. And then there are 8 major currencies, but there are only 7 major currency pairs. So let's see what are these. So these are the major 7 currency pairs, and you see in each of them US dollar is the most important thing. So number 1, we have Euro USD. It's also called Euro dollar. USD JPY, dollar yen, GBP USD called pound dollar, USD CHF, dollar Swissy, and USD CAD, dollar loonie, and so on and so forth, where we have Australian dollar and USD. The nickname is Aussie dollar, and New Zealand USD like Kiwi dollar. Okay, so but it's not always the US dollar is part of the currency pair. Sometimes we have currency crosses, like currency pairs in which we do not include the US dollars, and currency pairs that include any of the two other major currencies that we just discussed in the previous slide, except the US dollar, and they are also known as cross currency pairs or simply the crosses. So let's see what are those. So these are the cross currency pairs for the euro currency. So we have Euro GBP, also called Euro pound. We have Euro JPY, Euro yen. We have Euro CHF, it's also called Euro Swissy. And we have Euro AUD and Euro New Zealand and Euro CAD. So you can see in all of these euro currency pairs, euro is basically the base currency. Now let's look at some other cross currency pairs. Now we look at GBP, Great British Pound. So we have GBP JPY, GBP CHF, GBP AUD, GBP New Zealand, and GBP CAD. So you can see in all of these GBP currency pairs, GBP is the base currency. Now let's look at the JPY currency pairs. So we have CHF JPY and AUD JPY, New Zealand dollar JPY, and Canadian dollar JPY. And in this case, the Japanese yen is basically the term currency, it's not the base currency. Let's look at Switzerland franc cross currency pair. So we have these three: Australian dollar, New Zealand CHF, and CAD CHF. And you see in all of these currency pairs, CHF is the term currency. And for Australian dollar, we have Australian dollar and New Zealand dollar, also called Aussie Kiwi, and we have Australian dollar and Canadian dollar, also called Aussie loonie. And in the same way, we have New Zealand and CAD cross currency pair, it's also called Kiwi loonie. So we discuss about the currency pairs. We also have commodities in forex market. Not only the currencies are traded, we also trade commodities. And we have gold, we have silver, and then oil. So these are the three commodities that are traded. Uh, XAU slash USD, it's a gold pair. XAU is the short form of gold. It's also called ZAW slash USD. And then ZAG XAG slash USD is used for the silver. So these are the commodities in forex trading. So the major currency pairs are the most liquid in the world, and liquidity is used to describe the level of activity in the financial market. So these major currency pairs, whenever there is a trade going on, they provide us the most liquidity in the forex market, and the more frequently traded has high liquidity. And in forex, it's based on the number of active traders buying and selling a specific currency pair and the volume being traded. For example, more people trade the Euro USD currency pair and at high volumes than the Australian dollar slash USD currency pair. This means that Euro USD is more liquid than Australian dollar and US dollar. So the more people trade on a particular currency, it means that that currency has a more liquidity. It's highly volatile in the forex market. And that's about it, guys. Thank you very much for watching. I hope you like it. I will see you next time. Have a good day. Bye bye.